Hey everyone, it's Richard and
Andrew.
And we are back doing our little Friday coffee chats. Funnily enough, drinking coffee at apartment 3 because we do like our apartment 3. But we wanted to go into a few updates of what's been going on. So the first thing we wanted to do is talk a little bit about mortgage changes that have just come out because we're at the end of April. We had the budget announcement about a week or so ago, and there's a couple of changes coming through from that are absolutely going to affect first-time home buyers. And he knows.
Yeah, so there's two big ones that have come into effect, or the two big changes. One is going to be surrounding RSPs, and the other is going to be surrounding amortization for first-time home buyers. So let's talk about the first one, which is an increase to the amount of RSP room that you can use if you're a first-time home buyer to purchase a home. It is now being increased to $60,000.
From $35,000?
From $35,000, yeah, per person. So you have a household, you have two people buying, both can now...
Oh, so it's now $120 per
two
people.
Yep.
Right.
And that allows you to have a grace period of 5 years before you have to start paying that back. And then you have 15 years to pay it back in full. So it does give more room to get into a home as a first-time home buyer. Now, as you get over that $35,000 initially, you're really not looking at a 5% down payment. That is a higher down payment. It's someone that is really has a bit more savings. And also what I'm hearing a lot of is how is someone gonna pay back a full $60,000? So nonetheless, the government is actually trying to provide some solutions, but those are some of the comments that I've heard is that for first-time home buyers, we're really trying to get people into homes that are having a hard time coming up with that 5% down payment, not people that already have a large sum of money. But in bigger metropolis like Toronto and Vancouver, that is a big issue. Down payments are much larger.
Yeah, and you could be a little bit cynical if we felt like it by saying there's an election coming up soon and maybe this is a way of trying to get first-time homeowners to vote them to stay in another year. We could say that. But that would be obviously a little bit cynical. Maybe it's a little bit true or not. So that was the first thing, is bigger RRSP allowance to be withdrawn to use for your down payment.
Yeah, which honestly, and I'll make this point too, I think it's a good thing. It's just providing more options. Is it practical for everyone? No. But is it another option? Yeah. Yeah,
and you have to have over $35,000, $40,000, $50,000, $60,000 of RRSPs in the first place.
Yeah.
And again, you come back to first-time home buyers, and would a first-time home buyer necessarily have $60,000 of RRSPs saved there? Maybe, maybe not. Yeah. So it's just an extra idea to try and get first-time homeowners into the houses that they want to buy.
Yeah.
Okay. Second thing that's happened, and this comes with a caveat. So Andrew will explain it.
Yeah, and more interesting, this one's kind of fun, and what's happening here is the government's trying to allow first-time home buyers to qualify for a larger purchase price. And to do that, what they're saying we can do is if you're buying a home and you are under 20% down payment, the max amortization meaning the length, the full amount of period of time it's going to take you to pay off your home, the max rate now that you can go is 25 years for an insured purchase. So anything under 25% down payment, 20% down payment is 25 years. They're going to extend that to 30 years. And what that does is it lowers your monthly payment obligation per month, allowing you to qualify for a little bit more home.
Yeah.
So the idea here being that if you can qualify for more, it may get you into some more, another bracket of home or into another price point where you may not have been able to compete with some other people who are selling a home and buying a home. Actually a pretty interesting idea and cool idea. It's something we have heard maybe coming through the pipeline for a while, is extending amortizations when interest rates are high. And they almost hit the mark here, but there's a caveat, as you mentioned.
They were close.
They were close. They put a caveat in here, and that is that this program is going to be available August 1st, 2024, so in a couple months, but only if you are buying a brand new home. So it's a new build.
Construction.
New construction. If it's already built home that someone else is living in, you're buying it from them,
nope, out.
Does
out
not count. Program. It has to be a new build, either a new home or condo.
Yeah. So the question becomes, great, I'm a first-time home buyer. Likely I'm putting in a 5, a 10, or a 15% down payment. Most first-time home buyers aren't doing 20%. They're usually doing 5, 10, 15.
Yeah.
So the question becomes, where inside of Nova Scotia could you find new construction at a down payment percentage that's going to work for you, that you can then get a 30-year amortization on. Now, the only area that I tend to play in where there is cheaper new construction, in other words, not $700,000 and above, because most new construction inside of Halifax area is $700,000 or above, is actually up in Kiln Creek in Elmsdale.
Yeah.
They are the cheapest new construction there is interior townhouse, so a strip of like 6 or 8 houses, and it's the interior ones, not the exterior ones. And it's $499,900 for 2,000 square feet, 3 bedroom, 2 full bath, 1 half bath.
That's not bad.
Which is not bad.
That's not bad.
No,
Actually.
I mean, I just had a client
Not too
up
bad.
there, and that's how I knew the price, because I was up there,
Yeah.
and I'm like, oh, let's have a look at these townhouses.
Yeah, that's pretty good.
And you see the big board, and I was like, okay, $500,000, $500,000 for a brand new construction. That is, I would say, possible for some first-time homeowners. Depends on if they've had any money gifted to them, if they've been really careful with their savings, if they've got no student debt. All of these factors could come into play, which makes Kiln Creek, $500,000 new construction, possible.
Yeah, I think that purchase price actually shocked me, because when I heard that, I said, well, what first-time home buyer is buying new construction? There's not many. One, because there's not a lot of new construction available,
Yeah.
and two, it's really expensive. So here's the thing: if you're going to be buying new construction, it's outside the city. You're not.
It is.
It's outside HRM, or it's
Yeah.
inside HRM, I guess, but outside the main areas and the
Yeah.
main suburbs. You're going to have to go outwards. The other one here, where people that they've included in this is condominiums, so condos.
Right.
Which for, again, big areas like Toronto, Vancouver, where there's a lot of development in that area, it's going to be maybe more helpful than some cities like Halifax, Moncton,
Yeah.
some smaller.
Yeah.
Of course, we're on the East Coast, so we're talking that. But in bigger areas, the condos could come into play. But yeah, I think they almost hit the mark there. Of
Yeah.
course, if we're asking, is this going to help people get into homes? I mean, technically, yeah, if we're talking about Elmsdale, but for the vast majority of people, I don't really think so.
Yeah.
But I did think it was creative, and extending the amortization, I thought is something that if we're talking about qualifying someone for more, it would do that.
Yeah,
But
because it
it's-
reduces the mortgage payment, which allows you to have a better debt service ratio,
You got
which
it.
allows you to borrow more money.
Yeah.
That's the whole point.
That's the whole point. Yeah.
Add an extra 5 years onto the amortization, the mortgage payment comes down, which means you can afford more payment, which means the budget goes up.
Yeah,
in terms of
exactly.
what
So
can
if
get.
you
Yeah.
if extending the amortization by 5 years lowers your mortgage payment by $300, that may allow you to increase your purchase price by $75,000.
Yeah.
And there, all of a sudden, on a home you couldn't compete with, now maybe you can, because you
Yeah.
have that extra wiggle room, which
Yeah.
it does. Like that would work.
Yeah.
But again, it's only in new construction.
Yeah, so good try, government. However, like,
yeah.
why only new construction? I mean, I don't understand why they're doing that, because let's also look at new construction. We don't have a lot of it available anyway. Not only do we have hardly any inventory, we have even less new construction inventory,
Yeah.
because they're struggling to get the trades and the land and the materials to actually go and build new construction.
Yeah.
So yeah, you look at a builder and say, could you build me a new construction for $400,000? They will go, no. I could build, well, it would be small.
Yeah.
Like,
Yeah.
900 square feet, maybe. So that's the struggle when you start looking at some of these options, is they can work, but I get the feeling it's a pretty small population pool
Yeah.
that can actually get this to work
Yeah.
for them.
But it sounds good, doesn't it?
Sounds great.
Sounds good.
Well done, government.
Sounds good when you're talking about it.
There you go.
But there you go. There's the updates. There's
Yes.
the two big updates.
Yeah.
Your increased RSP room, 60,000, 15 years paid back, 5-year grace period.
Yeah.
First-time home buyers, you can increase your amortization to 30 years. That takes effect August 1st. Has to be new construction. Any questions? Reach
Talk
out.
to him
Reach
or
out.
talk to
Comment.
me.
Comment down
we
below.
got the details down there. Anything you need, Andrew's the guy for the mortgages, and of course anything else real estate related, just let us know and we'll do everything we can to help you.
Cheers, everyone.